Important note, this video is not financial advice. Always do your own research before making any investment decision. Past performance does not guarantee future results. Here's your market briefing from Rumour with AI. Crypto infrastructure is consolidating power as KAST secures an $80 million Series A round. The firm is building stablecoin native financial rails, targeting 1 million users and $5 billion in annualized transaction volume globally. This capital injection signals a fierce battle for dominance in the digital asset payment layer, moving beyond speculation toward utility. Meanwhile, traditional finance is reeling from a broader macro shock. Global bond markets are undergoing a severe sell-off, driven by fresh inflation data that has spooked investors. The ripple effect is immediate and painful. The S&P 500 and Dow Jones are under pressure as yields climb. Investors are rapidly repricing interest rate expectations, fearing that central banks may hold rates higher for longer. This volatility is not just a headline number, it is reshaping portfolio allocations across asset classes. On the geopolitical front, the strategic landscape is shifting dramatically. Analysis of recent readouts reveals a divergent path between Washington and Beijing regarding the Strait of Hormuz and Taiwan. Xi Jinping's strategic pivot suggests a realignment in Middle East geopolitics that could disrupt energy flows. The US-China divergence is no longer just rhetorical, it is operational. This tension adds a premium to risk assets, complicating the already fragile bond market recovery. In related news, corporate margins are under the microscope. NVR Inc. executives are receiving stock option grants, a move that often signals internal confidence despite external headwinds. However, the backdrop is grim. Brent crude has surged 8%, squeezing margins for construction and logistics firms. Analysts at Truist and BTIG have adjusted price targets downward, citing these margin concerns. The energy spike is eating into profitability, forcing companies to pass costs to consumers or absorb losses. Looking at insider activity, Fortinet CFO Christian Ohlgart sold 756 shares for $90,720 near the stock's 52-week high. While this is a standard liquidity event, the timing near peak valuation warrants attention. It suggests insiders are taking profits after a strong run, even as Q1 results loom. Analyst targets remain mixed, reflecting uncertainty in the cybersecurity sector's growth trajectory. Although there are no major economic calendar releases in the next 36 hours to anchor today's trading, the absence of data amplifies the noise from the bond sell-off. Markets are trading on sentiment and geopolitical fear rather than fresh economic indicators. The lack of a Federal Reserve or CPI release means volatility is driven purely by the existing macro narrative. The convergence of stablecoin scaling, bond yields, geopolitical tension, and energy costs creates a complex environment. Investors must navigate these intersecting forces carefully. The market is pricing in a world of higher costs and greater instability. That's your market briefing. Follow Rumour with AI for daily market intelligence.